Have you thought about growing your wealth but don't know how to start? Talk to Invest by Metricon. They make property investing easy. So for all your tomorrows, build your financial future today. Invest by Metricon. Build wealth. Build today.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Hello, everyone, and welcome to another episode of the Smart Property Investment Show. Maya here, your host today. First of all, we hope all of our listeners are doing well in these pretty challenging times. Today, I am joined by my colleagues, Fergus and Cameron, to chat about the latest property news. How are you guys doing?
Yeah, not too bad. Keeping along with all the lockdowns and that. But yeah, thanks for having us on.
Yeah. Thank you for joining me. Hey, Fergus.
Yes, it's good to be here.
Very enthusiastic. So it's been a pretty big few weeks. A lot of states have sort of entered and exited lockdowns, but the two major capitals remain under sort of pretty tough restrictions, that being Sydney and Melbourne. Despite this reduced mobility, property has been doing pretty well, but how long this momentum will last is something that we've all certainly been talking about on our podcast and on our page as well. And Steve Waters actually recently told Phil, that the property buyers are showing intent, but the results we're currently seeing are sort of largely made up of the properties that were physically inspected prior to lockdown. So buyers are starting to basically ask themselves now whether they should hold back from selling until that mobility increases again. So what's happening is that listings are expected to continue to drop, which could see us miss out on the spring selling season, which we all know is quite big usually. And then we're basically looking at Christmas. So it could be, February before we get a good influx of new properties on the market. But by then, we will also likely see that pent-up demand come into play, which could, again, spark another wave of growth. Although, we don't want to speculate too much, so we'll leave that to the experts. Instead, I think today we are actually going to talk about some of the things that are impacting property at the moment. So that includes the tenant law extensions in New South Wales, the economic predictions made by the big four banks such as Westpac, and how the economy is sort of going to impact property, the Australian property market passing $9 trillion in value just recently, and a few other things. But we're going to start with the tenants and how they're basically being protected across New South Wales and what that means for landlords. So Cameron, I know you're sort of quite up to date on all of that. Tell me what's happening at the moment.
Yeah, very unsurprisingly, this one happened. I think everyone kind of knew that they're going to extend this out with the lockdown continuing, but basically landlords will be getting another $1,500 in essence, because the first time we had this, they were protected for they said the lockdown was going to be stayed until the 11th of September. No one could be evicted. That was the basic rules they brought in. And as such, the government offered $1,500 to offset landlords who may lose money. However, once again, tenants are still losing that 25% because of lockdowns, still can't go to work. So this has been extended with landlords getting another $1,500 in a second as tranche.
Exactly. And it's actually good to see that landlords are getting some sort of support this time around. I know a lot of the property experts and sort of property advocacy groups aren't quite happy with the fact that the government is extending this help to tenants because, like they keep arguing, a lot of these landlords are mum and dad investors and they actually sort of depend on that income to live as well. So it hasn't been that popular, but it does sort of seem like some sort of balance needs to be struck because we know that a lot of people out there can't actually, they're losing 25% of their income at the moment or more even. So something like this is definitely, welcomed by a lot of people, I think.
Completely. Like if you look at from a tenant's point of view, they're only eligible for this scheme if the tenant has lost 25% of its work. So therefore, that's putting enormous financial pressure on the tenant itself. And landlords, they don't deserve to sit there and carry the can, put it that way. So, yeah, it's good that landlords are finally getting something as well. Like last time when we had the lockdowns, it was a lot of, talk about the fact they weren't given too much support. And it was basically they were told it's time for them to be a team player. So, yeah, it's actually surprising, but it's actually surprising in a good way.
Yeah, that's right, Cam. And another sort of result of lockdown, we could say, is this new permit system that has come into place. So we did see, a few weeks ago, that a man from Sydney travelled to Byron Bay to, I think, purchase a property and actually spent a few days up there. And, he's now sort of in trouble with the police. And I think he's actually caught COVID, unfortunately. But so this new permit system comes into force is in force actually already as of the 21st of August. So basically, the state government has come up with this to sort of stem the outflow of Sydney-siders into the regions. Fergus, you know a lot more about this than I do. So if you'd like to sort of tell us a little bit about what this means for property investors.
Yeah, absolutely. I love a good bit of interesting government regulation. This is definitely that. So as of the 21st of August, essentially, they will be bringing this new permit system into effect where if you want to leave the greater Sydney area and go into regional New South Wales, you'll need a valid permit. There are a number of reasons you can get a permit, but based on the current list of reasons that people are eligible to get permits, property investors will not be able to cross over from Greater Sydney into regional New South Wales for the purposes of property inspection. But basically, the government says that only people who are inspecting real estate who genuinely need a new home to live in will be eligible for a permit to do that. And specifically, the webpage calls out investment properties as something that they're not issuing permits for. So it's going to be very interesting because obviously this will suppress the ability of people living in Greater Sydney to go out and buy in those regional areas, which has been a trend we've seen over the last sort of 12 months. But the more interesting question, I guess, is how long is this permit system in place? There's not really a strict deadline for when the lockdown will end. It's not really clear at this stage. There are people who are speculating it could be months, and that could have a really interesting sort of knock-on effect on the wider property ecosystem.
It definitely can, because as we know, the regions have been sort of outperforming the capitals for a while. I think the capitals sort of finally started to catch up just before this latest round of lockdowns, but it's certainly going to be interesting. And we'd love to hear from, property investors that were maybe planning to venture out into regional New South Wales to look at property, and to maybe hear from property sellers in the regions as well, who might now think, I'm not going to list my property at the moment because all these Sydney-siders can't actually come up and view it. So that sort of cuts down on that, the buyer's market. So, yeah, write to us if you have a story like that. So our understanding is, though, with this permit system, if you do already have an existing investment property in regional New South Wales, you may actually be able to get this permit to travel out there, but only if that property sort of needs urgent repairs. And even then, only one person is sort of allowed to make that trip. So it's very sort of it's an interesting concept, these permits. And I think I read somewhere as well that they're sort of placing barricades around that Greater Sydney region. So anyone that's had any experience with sort of getting a permit or going through, to regional New South Wales, please do write to us. We'd love to hear more about how this is actually working on the ground. And Fergus, I know that the Property Council was actually quite concerned about how this might impact the construction industry and construction workers.
Yeah, it's definitely something that's not necessarily made explicit or covered by the current webpage about the permit system. Basically, there's a lot of construction workers who move in and around sort of regional New South Wales, and there's not really a permit exemption for them at the moment that's clear on the webpage. And like you said, only one person is able to make the trip to an investment property if the owner is going up for urgent maintenance. But obviously, if that's one person able to make that trip, they're not necessarily able to. That may mean they have to put off or postpone or cancel potential renovations and stuff like that.
Exactly. And boys, we're just going to take a very quick break and we'll be back in a second.
In the property investment industry, there's countless stories of the one that got away. And it's always the same reason. To pay the deposit, they needed the settlement from another property to come through, and they waited. Realty Assist Australia knows that when you find the one, waiting isn't an option. That's why they have a same-day settlement fund advance service. There's no credit check, no application fees, just a single one-off fee to advance your equity. Visit realtyassist.com.au/settlements now.
And we're back. So welcome to the Smart Property Investment Show. I've got my colleagues here with me today, Fergus and Cam, and we're just chatting through some of the latest news on smart property investment and how the lockdowns are basically impacting property. And as we sort of earlier said, it hasn't sort of had too much of an impact on auctions. Obviously, they're down on previous records, but the property market still seems to be doing pretty strong. However, obviously, the question remains how long that's going to go on for, given that we were just talking about people being unable to go to the regions to inspect investment properties, for example. And although within Greater Sydney, property inspections are still allowed, but it is a one-on-one sort of thing where, one investor and the real estate agent can inspect a property. However, I've been hearing some stories about tenants obviously not being that willing to have strangers come through their home, given that we are, we sort of haven't seen a worse COVID situation in the country than the one we're seeing currently in New South Wales, I think. So it will be sort of interesting to see how that affects the auction market and whether sellers sort of pull back from trying to sell during this period, essentially. Fergus, another COVID-related measure is this commercial rent relief mandate. So we talked about sort of the residential tenants. What's happening in terms of the small businesses and the shops they're renting? I know a lot of our listeners are looking at buying commercial property, which could potentially affect them.
Yeah, well, much in line with the rent relief sort of schemes going around for residential tenants, the government has also reintroduced this lovely piece of regulation called the Retail and Other Commercial Leases Regulation 2021.
Oh, what a creative title.
Name. Like I said, I love interesting government regulation. But basically, it mandates that commercial and retail landlords have to renegotiate rental obligations in line with the National Cabinet's Code of Conduct. And where this scheme, I believe it was either due to expire this month, but they've now extended it to January 13th, 2022. And basically, commercial and retail landlords now in New South Wales specifically now have to provide tenants with rent relief that's in line with their decline in turnover. And then of that rent relief, 50% of it must be waived rent versus renegotiated or pushed down the line, deferred rent rather. And it also prohibits landlords from evicting or locking out tenants for breaching the terms of their leases without having first renegotiated the rent and attempted a mediation. Obviously, if you're a small business, this is pretty reassuring to you. However, on the landlord sort of side of it, the Property Council has sort of expressed a bit of concern here that it's a very much a one-size-fits-all measure. And they're also more broadly concerned that it may outstay the duration of the lockdown, which is a bit of a hypothetical, I guess, whether the lockdown will still be around by January, but that is a fair.
Yeah. Well, I guess, even if lockdown is not, which we all hope, we certainly do all hope that it...
Please don't be around in January.
Yeah. We all hope it will end well before then, but it will take, obviously, small businesses, quite a while to recover from this. I mean, being closed for weeks for some is not the ideal situation, even months. But looking at sort of the economy now, Westpac just issued their latest sort of forecast for the economy, and they are now predicting a pretty sharp contraction of the economy in the September quarter. But they're still sort of quite confident that the economy will bounce back in December. And they're quite confident, actually, that the RBA will sort of lift rates in the first quarter of 2023 and that all the preconditions for that will be met by then. How do you feel about this, Cam? What are you sort of seeing from the other banks?
Well, from the other banks, we're seeing much of the same sort of predictions. Everyone's saying that in September, it's going to be a bloodbath, essentially. Everything's being closed down. Consumer spending is meant to drop as much as 15%. Consumer spending makes up about 55% of the economy. So that's a huge whack to the, economy as a whole large. But in good news for the businesses we're talking about just before, a lot of the damage is meant to be very, very, short-lived in the fact that we're going to have a cut till mid-September, October, depends on when lockdowns kind of are predicted to end. And then all of a sudden, we're going to have this huge wave of demand coming through for consumers, which is going to lift the entire economy up. Westpac themselves saying that the 2.6% drop in September quarter will pretty much be offset by December quarter. Then they're predicting that jobless rates, the unemployment rate's going to fall to the early fours. And then from there, we're going to see inflation come through, and then we're going to see a rate rise in 2023.
Exactly. Yeah, it's sort of very interesting to see because they, I think a few weeks ago, they sort of said that, the economic drop was going to be around sort of 2%. So they've now increased that. So it is changing. Like everyone is sort of making their predictions based on vaccination targets and based on how long we predict that this lockdown will go on for. But unfortunately, none of us actually know what's around the corner. So I think take this with a grain of salt, and I guess we'll see. But the banks do seem to insist that the RBA will have to lift rates much earlier than the RBA says they plan to do, which is quite interesting, isn't it?
The RBA is praying for the fact that it comes in 2024. They've said this 100 times. They keep saying it's going to be lower for longer. That's their mandate. That's what they're pushing for. And it'll be really interesting because the banks, obviously, the higher the rates, the higher the margins. That's good for them. But the economy is actually looking at a position where we're actually going to have to lift rates sooner than later. Like, you can't stay at historically low interest rates forever because, as we've seen with the property market, with the share market, all it does is lead to huge increases in prices for things.
Exactly. That's very true. I guess we'll see what happens, but I'm guessing that, property buyers aren't sort of keen for the banks to lift that just yet, but we'll see.
Depends on what side of the equation you're on, I guess, because if you're a buyer, you're trying to get into the market, something slowing it down might be a good thing, but if you're a seller, you might want it to keep going up forever. So it's interesting what will happen.
Yeah. And Cam, just also looking at sort of CoreLogic. So, it's very interesting to see that residential real estate basically continues to underpin Australia's wealth. So that value has now increased to $8.8 trillion across 10.6 million Australian dwellings. So that's quite big. That's a massive number.
It's huge.
How many zeros is that?
I'm going to say, it's insane. We're up to 8.8 trillion. There's predictions saying it's going to get to 9 by the end of the year. Some people are going as far as 10 trillion. It's huge. But you look at the numbers that come through. There's 3 capital cities alone that have grown by 20% plus in a year, which includes Darwin, Hobart and Canberra. We've seen overall 13.5% growth across all capital cities. You're looking at the fact that, it's now bigger than, you look at the superannuation market in total, which is 3.1 trillion. You look at the stock market, which is 2.8 trillion, and commercial real estate, which is 978 billion. So you plus them all together, you don't even get Australia's property market right now.
Exactly. And it's interesting to see, you were just talking about those growth rates and basically, like you said, Darwin, annual growth rate at 23.4%. That's crazy. And then you've got Melbourne last at 10.4, which is still quite impressive for Melbourne. The other day I was talking to Steve Waters as well, and we were saying, who's looking to buy property in Melbourne at the moment? I'm sorry, Victorians, but it doesn't seem like, the place to be. I don't just mean this lockdown, but it's, they've sort of, what is it, number 6, number 7 that they're sort of currently in. It doesn't give you much confidence, does it?
No, but look at the numbers, as you said yourself. You said 23.5, give or take, for Darwin. And you go, well, Australia's long-term property average is about 7%. The whole adage of it doubles every 7 to 10 years. It grows by about 7% per annum. Right now, you're looking at numbers where it's property prices in Darwin will essentially double in 3.5 years' time, which crazy, right? Is insane. No matter how you look at that, that is, I know it's off a low base, that's incredible.
Yeah, it's and just looking at these numbers as well, the regional markets. So we were just earlier talking about these regional permits, and New South Wales was actually sort of the top performing market with, values rising 22.9% in the last 12 months. So it's certainly going to be interesting to see how New South Wales sort of performs over this next and the September quarter and obviously December, because we don't still know, like Fergus mentioned, how long this permit system is going to last and how long, investors are going to be sort of barred from actually buying property. Because, you can sort of buy, sight unseen, but it's quite interesting at the moment in terms of just, as we were saying, sellers likely pulling back at the moment and sort of waiting for those better times. Because if you don't have to sell now, what is the point of doing so? But guys, we're just going to take a very quick break and we'll be back in a second.
The mark of financial success isn't about getting bigger, better, faster, or more. To Paul, success is freedom. Freedom to spend more time with his family, or giving back to his community, or just more time to go surfing. Paul Glossop, an award-winning property buyer and regular guest on the Smart Property Investment Podcast, has taken the lessons he's learned building a multi-million-dollar property portfolio and laid them out in his best-selling book, A Surfer's Guide to Property Investing. For a limited time, get your free copy of Paul's award-winning book and receive a roadmap for building both lifestyle and wealth through property investing. Grab your free copy today at purepropertyinvestment.com.
And we're back. So I've got Cam and Fergus with me today, my colleagues across Consumer Wealth, which includes SBI. So, guys, we've just been chatting through all the sort of latest news, most of it sort of COVID influence, which I guess everything at the moment, including our daily lives, is, unfortunately. So another very interesting legislation, Fergus. So something's happening with the land acquisition. That's sort of seeing some reform. Tell us about this. I know you've sort of studied this, over the last few days. Tell us what's happening.
Absolutely. As mentioned, love a good reform. So the Lands Acquisition Act underwent a review earlier this year, and the federal government has basically announced that it's going to be implementing 16 reforms which are recommended by that review into the act. The act basically decides how and what the government can do when it comes to acquiring land for public interest purposes. For example, stuff like maybe the Badger Creek Airport or other sort of big infrastructure investments. The act sort of determines how far the government can go and what it can do in terms of compensating landowners for their land and how it sort of reaches those things. The big thing that the review sort of highlighted is that there's sort of perception of a financial incentive that if a landowner sort of refuses to come to the negotiating table with the government will be forced to acquire the land via the act and then have to basically go to court to debate about how much the land is really worth, and that they'll, in the long run, maybe be better off rather than coming to the negotiating table to begin with. So a lot of the reforms are about basically making the government a bit more proactive and sort of aggressive in terms of just trying to lock in these deals and actually reduce the sort of overall headache for this sort of practice.
Is this sort of a good time to be pushing this through? I know obviously we in New South Wales and Victoria at the moment, we've got our heads full of COVID, but I guess, government has to keep doing what the government needs to do.
Yeah, absolutely. I mean, it's very much a long tail consequences sort of set of reforms. For example, it sort of calls for the development of a citizen-centric case management model, which is basically they want to actually develop a new sort of approach that makes landowners feel like they're sort of more involved with the process rather than making it feel more sort of opaque and very impersonal, and sort of make them feel like they're actually involved in the process and getting fair value for their sort of asset. And then they've also sort of doubled and tripled the payments around emotional loss and multi-generational homes, essentially, which is basically like a bonus payment you get when the government acquires land that's like a house that's been in your family for generations, or a house that doubles as your place of business. So they're just trying to clean up and just make it seem much easier for landowners to kind of come to the negotiating table and sort of allow the government to acquire their land via mutual agreement rather than having the government acquire their land and then sort of work out compensation after the fact.
Yeah, that makes sense, I guess, for sort of, everyone that's a landowner. And if you do want to find out more about what's happening in terms of this reform, please go to smartpropertyinvestment.com.au, where you can sort of see Fergus's piece about this. And I know he's going to be following this for some time. But guys, we're coming to the end of this podcast. I just wanted to mention as well that 4 Aussie cities were actually recently recognised as some of the biggest winners in this global trend of pandemic-induced property price gains, which I guess, like we've been talking today, isn't sort of very surprising. So among sort of the top 21 cities around the world, we saw Sydney, Perth, Brisbane and Melbourne, surprise, surprise, feature in that top 21. Of course, Sydney sort of led the pack. It was in 8th spot. So it's interesting to see that our cities, it's not just, we're not the only ones that are seeing this crazy growth happening. It's actually being recorded sort of on a global scale. People are looking at Australia and the price growth over here. So guys, do you sort of have any final thoughts on, the property market and what you've sort of seen over the past 12 months, and any sort of, I guess not predictions, we're not the ones that do make predictions, but just, some of your sort of insights about what you've been writing and reading over the past few months?
Yeah, I guess the big one for me would be is how long can this boom kind of go? Like, I sit there and I look at things like wage growth, which has been in the toilet in this country for the last 10 years, and the prices in houses that keep increasing. So, yeah, I'll be fascinated to see how long this keeps going over the next couple of years, and if we see eventually it slows down.
Exactly. And how about you, Fergus?
Well, you know me, I'm all about the policies. So for me, I am definitely thinking about, I guess, the long-term impacts of Labor sort of abandoning their reforms around negative gearing and not stamp tax, so it's capital gains tax.
Yes.
If neither sort of major party in Australia is sort of pushing for reform in those areas, it kind of narrows down the number of policy levers you really have to either reinforce or sort of put the brakes on the property boom. So it'd be very interesting to see what policies or tools actually get deployed to try and.
But where I guess, especially us, people with no property, young people with no property, we're sort of very, we're very happy to hear about the stamp duty reforms as well. I know, in New South Wales and across the other states, it's being sort of explored. Different systems are being explored, and it is a sort of hefty cost, isn't it? You've got the deposit you have to save for, and then you've got this stamp duty, which is just like, come on.
Here's another whack for you, 100%. So, yeah, it's nice the fact that we actually might get a land tax instead, which, I don't know, I guess over the longer term it evens out, but it's nice at the start.
Exactly. And, it is, because at the start, if, the less money you have to save for, the quicker you're sort of able to get into that property market. So let's see what happens. Well, thanks, guys, for joining me today.
No worries. Thanks for inviting us.
Thanks so much for having us.
Thank you to our audience for tuning in. Please keep reading us, smartpropertyinvestment.com.au, and keep sort of tuning into our podcast. We all know that you love hearing from Phil and all our experts and our investors. And if you are an investor that's willing to sort of share their story with us and Australia, and if you've had experiences with any of, what we talked about today, including that permit system, please do write to us at editor@smartpropertyinvestment.com.au. Thanks for tuning in again, and we'll catch you next time.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
In the property investment industry, there's countless stories of the one that got away. And it's always the same reason. To pay the deposit, they needed the settlement from another property to come through, and they waited. Realty Assist Australia knows that when you find the one, waiting isn't an option. That's why they have a same-day settlement fund advance service. There's no credit check, no application fees, just a single one-off fee to advance your equity. Visit realtyassist.com.au/settlements now.